Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news August data starting to show the shift in global economic sentiment is turning south. But first, after the prior week's recovery in the American retail impulse, last week's same-store survey built on that, returning to the good year-on-year weekly gains we've seen since early July. These are gains far better than can be explained by inflation. However, American new home sales fell sharply again in July to an annual rate of only 511,000 and way lower than the expected 575,000. In fact, that's the slowest pace in new home building in 6 years there. And there are increasing reports of company layoffs, and we should expect the data to start to show that, and the turn down in the long-running labour market expansion. The great resignation trend may be over, in the US at least. And the Richmond Fed's factory survey covering the Mid-Atlantic states region was another that was reporting a contraction now. And there were a raft of flash PMIs released overnight for August, and the one for the US reported a slower expansion in their factory sector, but a further contraction in their services sector. Having noted that, the factory sector's expansion was its weakest in 2 years. And the survey results point to weak client demand to explain the retreats. And it was the same story in Japan, where the same survey found a factory sector still expanding but at a much reduced pace, and a services sector that moved into a small contraction. And Singapore's inflation rose to 7% in July from a year ago, although the month-on-month rise was tamer than they've had recently. And in a surprisingly hawkish pivot, the Indonesian central bank hiked its policy rate by 25 basis points yesterday to 3.75%, saying it needs to mitigate rising inflation risks there. And after falling to an all-time low in July, the EU's consumer sentiment survey in August stayed worryingly weak, even if it did improve marginally. They are building a fear of winter there, given the Russian shut-off in energy shipments. And the US Treasury 10-year yield starts today at 3.05%, and little change from this time yesterday. And the price of gold will open today at $1,748 an ounce, which is up $11 from this time yesterday. And oil prices start today at just under $94 a barrel in the US, which is a sharp $4.50 rise, while the international Brent price is just under $99 a barrel. And the Kiwi dollar will open today at 62.1 US cents and 0.5% higher than this time yesterday, against the Australian dollar with little change at 89.7 Australian cents, and against the euro we're risen about 1/4 cent to just over 62.3 euro cents. That all means our trade weighted index starts today at 71.3 and a further firming. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.